Hello and welcome to The Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace Curran. Well, European stocks rounded out their worst week in over 3 months as Donald Trump's comments about potential tariffs on the European Union spooked investors. However, stocks on Wall Street surged on Friday and the dollar softened as cooler than expected inflation data helped buoy investors. The Dow and S&P recorded their biggest daily percentage gain since the beginning of November. For the week, the S&P 500 fell 2%, the Nasdaq declined 1.8% and the Dow dropped 2.25%. Yet a number of mega cap stocks have performed well this month, including Tesla, which is up 26%, however reversed some gains on Friday, while Alphabet is up 12%. Broadcom shares have surged 35% so far in December after the company forecast booming demand for its custom AI chips, pushing its market value over $1 trillion. Shares of US drug maker Eli Lilly rose, while Novo Nordisk's shares plummeted after its next-generation obesity drug underperformed in a study. A falling US dollar boosted copper prices, which saw US-listed shares of global mining giants BHP and Rio Tinto rise. And similarly, the gold price rallied, sending shares of the gold miners higher. US Treasury yields slid on Friday after data showed inflation in the world's largest economy cooled last month, supporting the decision by the Federal Reserve to cut interest rates by 1/4 percentage point and bolstering expectations of 2 more rate reductions next year. Consumer spending for November rose 0.4% last month. The Personal Consumption Expenditures Price Index rose 0.1% in November for an annualised print of 2.4%. Treasuries also drew safe haven bids ahead of a possible partial government shutdown after Republicans rejected a demand by President-elect Donald Trump to use the measure to lift the nation's debt ceiling. However, the US Congress passed spending legislation on Saturday, extending government funding until March 14th. The yield on the US 10-year slid around 5 basis points to 4.52%, while the 2-year yield was around 4.3%. The US dollar pulled back from a 2-year high on Friday. The dollar was down against a basket of its peers after spiking up to 108, its highest level since November 2022. The Aussie dollar has recovered a little to be at 62.5 US cents, and Bitcoin is sitting just above 95,000 US dollars. Oil prices were little changed on Friday as markets weighed Chinese demand and interest rate cut expectations after data showed cooling US inflation. Brent crude futures sat around $72.94 US a barrel, while copper prices rose after falling to a 5-week low hit in the previous session as the US dollar retreated from its 2-year high. Iron ore prices weakened as the Australian government forecast sharply lower prices and as traders awaited China's next move to support its economy. And gold rebounded, supported by a softer dollar and Treasury yields. Spot gold was up 1.2%, sitting around $2,600 US per ounce. For more on what's moving markets, Mugunthan Siva from India Avenue Investment Management joins me now in the studio. Mugunthan, welcome. Great to have you here.
Thank you.
Let's discuss the upcoming launch of an active ETF by India Avenue. Tell me, what are some of the core themes and why?
So the active ETF is essentially a listed version of our fund. And today when we look at our fund, obviously it's a play on the India growth story. And today the sectors particularly that we like are areas like pharmaceuticals, which is part of the manufacturing, make in India, export to the rest of the world, and IT. Obviously India has benefited from outsourcing services to the rest of the world from an IT perspective, and they're now in a great position to, for example, integrate artificial intelligence, help businesses build digital platforms, consult to them from an IT perspective. So those are 2 specific thematics we're playing. I think just to round that off, consumer discretionary is also a thematic. We're finding in India a lot of people are shifting their allocation of budget from purely staples towards areas like taking flights to other parts of India, travelling overseas, buying their first motorbike, simple shifts from needs towards wants.
And so do you see this ETF helping mum and dad investors to get exposure to India's market?
Yeah, typically the reason we've launched an ETF when we already have an unlisted fund is to allow greater accessibility. The unlisted fund has a minimum investment amount of $50,000, whereas an ETF can be more easily accessed by retail investors, and it also allows you to access it via your broker account rather than having to fill out a form.
And so you say you're overweight with pharma and tech and underweight in consumer and financials. So why are the opportunities here, and is this just a cyclical story?
No, India's very much been a structural story. I think for the last 20 years or so, GDP growth has averaged close to 7%. And we've seen since COVID, in 2021, India had a return of about 35%. In 2023, it was around 20%, and 2024 so far 24%. So it's been driven by strong earnings growth, which has been fueled by the underlying demographics and the strong growth. So I don't see that changing. There'll be cyclical weak spots along the way. In fact, we're probably in one now, but that gives investors potentially an opportunity to add India as part of their portfolio.
And how do you see the Fed potentially cutting less next year and tighter financial conditions impacting India? Do you see that it could limit foreign investor enthusiasm?
Look, I think any time where potentially inflation is an issue for economies either emerging or developed, but more so in emerging, there's always a concern that it can slow down the growth rate that we just talked about. So if that's the case, then like in 2022, India's return profile might not match what it's achieved in prior years. But if I go back to 2022, India actually had a flat year rather than a negative year. So I think we're in a cycle where investors want to invest more into the region, but if the Fed decides that perhaps we're going to be hiking rates rather than cutting rates, then that's going to affect equities everywhere.
And we saw on Friday Indian shares plunged as sentiment soured a bit after that Fed announcement and comments. What do you think? Do you see this as a short-term thing, or do you see that trend continuing?
Yeah, look, I think as you saw globally, most share markets came off. And I think given the numbers we talked about in terms of returns over the last few years, Indian shares are certainly not cheap at the headline or the MSCI India level. You would find valuations over 20 times earnings next year. And that means that anytime there's a concern about sentiment or risk in a market like India, there's probably some element of profit taking. But I think, as I said, it's more cyclical, whereas the structural story remains in place.
And I've seen that India's IPO market was quite impressive this year, some record fundraising driven by economic growth and investor confidence. What was it like for you to witness that? Is there anything that stands out?
Yeah, it's also because returns have been so high. So a lot of companies list on the stock market. An example is Hyundai, which is not listed anywhere else in the world except Korea. And their second listing place was in India. So taking advantage of the fact that Hyundai has a very strong market share in India, is growing strongly, as well as Indian car ownership is still less than 5%. So the opportunity to grow from a young population seeking to shift towards wants, as we said, gives these car companies, for example, a great opportunity to get capital from outside of just Korea or the US, where they may have an ADR, in other markets like India, where investor appetite to invest in equities is rising.
And do you see 2025 also being a big year for IPOs as well, and why would that be?
I think if share prices remain elevated like they are everywhere, then there will be companies that come to the market and look for capital. In India, it makes particular sense because you're accessing capital with a view that the growth is going to be strong. So I think whether you look at the World Bank or the IMF or any accounting firms' predictions for growth in India, we're looking at 6.5% plus over the rest of the decade. So I think that's why companies are looking to raise capital with a growth opportunity standing in front of them.
Great, thank you so much. Mugunthan, Siva there. And just before we go, we'll just getting one final check on where the local market is set to open when trade gets underway. SPI futures up 13 points there. So that does it for this edition of The Global View. Stick around, the Open is coming up next.